This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, June 11th, 2015. Euro dollar. So right now the euro is chopping around, and the key levels to watch above and below come in at 114.67 above and 108.19 below. A break on either end is going to be required for clear directional bias, but right now the overall downtrend remains intact while the market holds below 14.67. At this point, a break back below recent lows that we saw that come in around the 112.15 area would be required to put the pressure immediately back on the downside, while a break below 108.19 would be required to confirm a bearish continuation and expose the retest of the 2015 and 12-year low from March at 104.62. A daily close back above 14.67 would take the immediate pressure off the downside and potentially open the door for more significant euro correction over the coming weeks. Sterling dollar. So cable has rallied back up in recent trade above 155, with gains so far stalling out just over 155.50. But if we look back to resistance that we saw going back to February of 2015, the market had stalled out there as well. So there is some good internal resistance that comes in by this level. If the market can hold below 155.54, the high that we saw on Wednesday, this will put the pressure back on the downside, back towards those recent lows that we saw at 51.70, and then to further support below there. At the same time, a close back above 155.54, Wednesday's high, would open the door for a potential retest of the 2015 high that was set back in May at 158.15. Dollar yen. So dollar yen has been in the process of correcting this week following recent gains to multi-year highs at 125.85, with the market pulling back into the 122s thus far. At this point, there is risk for additional declines in this market towards that previous breakout point, which is now previous support resistance now turned support at 122, but any setbacks below 122 should be very well supported in favor of a bullish resumption back towards that recent high and above into towards the 130 area further up. Euro Swiss. So Euro Swiss continues to be very well supported on dips, with the market recently looking to put in a 104.40 higher low to be confirmed on a break back above recent highs at 105.75. Look for a push above 105.75 to open the door for the next major upside extension towards the February peak at 108.15. Aussie dollar. So Aussie has done a good job of consolidating just off the multi-year low and 2015 low, which comes in at 75.33, that was set back in early April. But overall, the downtrend remains firmly intact, with any rally seen very well capped ahead of 80. Right now, resistance comes in at 78.19, which represents the high that we saw back on the 3rd of June. A close above could open the door for a move towards 80, but inability to close above will keep the immediate pressure on the downside, with a focus on a retest and break of that multi-year low from earlier this year at 75.33. Dollar CAD. So dollar CAD has finally broken down and reached the objective off a double top that had been triggered earlier this week, with the market trading into the 122 area. A higher low could now be sought out, with the overall bullish structure intact in favor of a resumption of gains back above recent highs that we saw in the 125.65 area and towards the retest of the 28.35 2015 peak further up. At this point, only a daily close below 21.50 would really compromise the current outlook. Kiwi dollar. So Kiwi has broken down to yet another fresh 2015 and multi-year low, with the market at its lowest level since 2010 and trading down to just shy of 70 thus far. A break below 70 will expose next key major support barriers at 65, and really at this point, any rally should be very well capped ahead of recent highs that we saw at 72.32, going back to the 10th of June high. SPX 500. So the S&P 500 had a really nice bounce on Wednesday, though the bounce is still within a choppy trade that we're seeing, and the market is still looking like it could be in the process of topping out following recent record highs that were set at 21.37. At this point, a break back below the weekly low that we saw, which comes in down around 20.70, would be required to confirm and strengthen this outlook, while ultimately a break below 20.40, that low that we saw posted back in March, would be required to shift the structure and officially signal some form of a major top in U.S. equities. Only back above 21.37, however, would put the pressure back on the top side. Gold. So gold has done a really good job holding above on a daily close basis that internal support that we've been talking about at 1170, and the market could be poised for additional strength over the coming sessions back towards the recent high that we saw going back to the 18th of May at 1232. A break above 1232 would open a more significant recovery back towards and above the 1300 area, while a break and close below 1170 would negate the recovery prospect and put the pressure back on a retest of the critical 2014 base at 1131.